Welcome to our video on inheritance tax implications, a concise guide aimed at helping heirs and beneficiaries navigate the complex processes involved. This guide focuses on the United States tax system, providing clarity on common scenarios and reporting requirements. In this video, we'll first introduce what inheritance tax is and why it is important to understand it. We'll then explore if the inheritance is taxable and how capital gains tax might apply if you decide to sell inherited properties. Following that, we'll delve into the critical details of estate tax considerations and why accurate reporting is essential. Finally, we'll highlight the importance of seeking professional advice to ensure compliance with tax regulations. Inheritance itself is generally not taxable. In the United States, the recipient of an inheritance typically does not pay federal taxes on what they receive. This leads to a common misconception about inheritance taxes impacting heirs, which, in most cases, does not occur. However, complications may arise if the inherited assets are sold. That's where the capital gains tax comes into the picture. When an inheritance includes assets such as real estate, selling these assets subjects the gain to capital gains tax. This tax is based on the difference between the sale value and the stepped-up basis, which is the asset's market value when the original owner passed away. This can often lead to a reduced tax burden for the heir as compared to if the asset was sold by the original owner. Understanding this can greatly benefit heirs when planning financial decisions post-inheritance. The estate, which is the totality of the deceased's assets, is responsible for any estate taxes, not directly the heir. This tax is applicable only to particularly large estates, with high exemption limits, meaning only a small fraction of estates nationwide are subject to it. In situations where the estate lacks liquid assets, selling inherited properties may become necessary to meet tax obligations, indirectly affecting the heirs. Planning with an understanding of these obligations is critical for seamless inheritance management. Who is typically responsible for estate taxes? A. The heir. B. The estate. C. Both the heir and the estate. D. Neither. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is the estate. The estate is legally responsible for handling and paying any taxes attributed to it, not the heir. This concept is a foundation of inheritance tax laws in the United States. Even though the inheritance itself is generally not taxable, accurate and transparent reporting is essential for compliance with tax laws. The value of the inheritance should be properly reported on tax forms to provide clarity and ensure accurate accounting. This transparency is not only a regulatory requirement, but also critical for preventing potential legal challenges or disputes down the line. Due to the complexity surrounding inheritance tax and related laws, it is highly recommended to consult with a qualified tax professional. This is particularly important if dealing with large estates or complex asset structures. A professional can provide personalized advice, helping heirs navigate their tax obligations while ensuring compliance with all applicable regulations. Their expertise could potentially save you from costly errors or oversights. In summary, while receiving an inheritance is generally free from direct taxes, several aspects of taxation might affect heirs. Paying attention to capital gains and estate taxes, and accurately reporting inherited assets are steps one cannot overlook. As complexities may arise, consulting a tax professional can provide tailored advice and ensure compliance with legal obligations. Keeping these points in mind will help heirs to responsibly navigate their financial futures. Thank you for watching our guide on inheritance tax implications. We'd love to hear your thoughts, so please leave a comment below. If you found this video helpful, don't forget to give it a thumbs up and share with others who might benefit. And of course, subscribe to our channel for more valuable content.